Welcome. I'm Jasmine De Silva, and I'm the Business Development Manager for Risk and Insurance Solutions at the Bermuda Business Development Agency. We're delighted to partner with NetDiligence to bring you this informative and timely discussion. As one of the world's leading insurance and reinsurance hubs, with a track record of providing innovative solutions to industry needs, Bermuda is not only well placed and positioned to respond to the growing demand in cyber insurance, but to take a leading role as the market continues to evolve. We hope that you find this session useful and informative. And if you have any further questions on doing business in Bermuda, please do not hesitate to contact me at bda.bm. Enjoy.
Hello, everyone, and welcome to NetDiligence and this webinar on the Bermuda cyber market. My name is Heather Osborne, and I'm the Director of Global Events and Programming here at NetDiligence, a cyber assessment and data breach services company. We're pleased to be extending our thought-leading content into the virtual space with this webinar today and invite you to visit us at netdiligence.com to view all of our upcoming programs. Before we begin today, I'd like to extend our thanks to the Bermuda Business Development Agency for their support and sponsorship of this program, as well as to the speakers who have worked hard to prepare to provide their insights to you on this very important topic. This session will last approximately 60 minutes and is being presented on the ON24 platform. You are viewing the ON24 dashboard now, which shows the live viewing screen and other features. During the webcast, all participants will be in listen-only mode. Our speakers will be taking questions throughout the session via the questions widget. Please type in questions during the presentation and click Submit. You may also use this feature for technical questions. In the bottom left corner, you will find a widget named Resources, where you can download assets our presenters and sponsors have provided. Just click on the resource and it will be automatically downloaded. As a reminder, this webcast is being recorded. Following the webcast, you will receive an archive link to the presentation for further review or sharing. In addition, the webcast will be available for viewing on demand on our website. Again, on behalf of NetDiligence and the Bermuda BDA, thank you for joining us today. It is now my pleasure to turn you over to the panel and to your moderator, Suzanne Williams-Charles from the Association of Bermuda Insurers and Reinsurers. I hope you enjoy the program, and I look forward to seeing you again soon.
Thank you, Heather. And thank you also to the BDA for inviting me to participate in this cyber panel. I am Suzanne Williams-Charles, and I'm the Director of Policy and Regulation, Corporate Secretary, and Data Privacy Officer with the Association of Bermuda Insurers and Reinsurers. I want to first start by introducing and also welcoming today's panelists. Firstly, Donovan Burgess. Donovan is an Assistant Vice President, Senior Underwriter at AXA XL Bermuda. Within their professional and cyber liability team, he manages an extensive cyber insurance portfolio comprising of Fortune 1000 companies across all industries and segments. Ari Chatterjee. Ari is the Chief Underwriting Officer of Envelope Risk and responsible for underwriting and insurance product development. Emma Norman. Emma serves as an Assistant Vice President for Aon Cyber Solutions Group in the Bermuda Global Broking Center. Emma is responsible for cyber technology error and omissions and media liability insurance placements for large Fortune 1000 companies. And finally, Sarah Sperling. Sarah is Senior Vice President, Professional Lines at Sampo International and has been with the company since 2005. Sarah has over 16 years experience underwriting and is responsible for the Bermuda management of the Sampo Pro and Commercial D&O portfolios. Thank you and welcome to the panelists. With 2020 being an unprecedented year of disruption and uncertainty, in 2021, Bermuda remains a stable yet innovative platform, reflected by increasing capital growth and the number of startups that came out of 2020. Bermuda continues to solidify its reputation as the jurisdiction of choice and establish itself as a leader in cyber risk. Today, we will address the state of Bermuda's cyber market, highlight current trends in cyber insurance and reinsurance, and discuss the innovative solutions that Bermuda continues to create. So I think a good place to start is taking a look at the reinsurance market in general. At the end of 2020, Moody's said its outlook on the global reinsurance sector is negative for 2021, reflecting the uncertainty around the coronavirus-related losses, as well as the expected impact of low interest rates, shrinking reserve releases, and expensive retro coverage. So let's start with each of your thoughts on how you see cyber fitting into this projection in the Bermuda context. Sarah, would you like to start?
Yes, thanks, Susan. It's great to be back, even though we're remote this time. I'll give you kind of some thoughts on the insurance market from my perspective in Bermuda. For the past several years, the cyber market has been expanding. We've seen kind of a flood of new entrants to the market. That's been, against a protracted period of softening terms, excess capacity as these entrants enter the market, and then also decreasing rates in the cyber insurance market. Against that, we have the threat landscape, which has been shifting fairly rapidly, and we've seen the market seeing increasing threats and emerging threats such as ransomware and extortion, which have kind of been top of our list. This has resulted in some claims increases, both in severity and frequency, and they're also hitting a variety of different industries and organizational sizes that maybe previously we haven't seen. In response to that, most recently, we've seen some signs of a hardening market, especially in the latter part of 2020. There's been retraction of limits and specifically carriers exiting the cyber insurance space, especially in London. So this is kind of, a very important time and exactly the type of market that highlights Bermuda's cyber insurance value proposition. Bermuda has always been viewed as a long-term platform, jurisdiction with stable capacity and with a long history of claims payments. And while we've always not been the cheapest or had the broadest terms, once we're on these cyber insurance programs, Bermuda has historically been stable capacity, which is increasingly important in this environment. And while some of these jurisdictions have retracted, Bermuda is steadfast and stable. Clients and cyber insurance programs that have engaged Bermuda capacity have seen better consistency on their renewals, and it's highlighted the importance of Bermuda as a jurisdiction and an important place to be purchasing cyber insurance.
Thank you, Sarah. Emma, would you like to give us your perspective?
Yeah, definitely. Good morning. I think Sarah really sort of hit the nail on the head there. Bermuda should be very well positioned to sort of respond to the uncertainty of the marketplace. Historically, the Bermuda marketplace has sort of had a very high excess attachment for the majority of the accounts that they sort of participate on. And the lack of large limit insured cyber events that we've seen across our books means that we really haven't been as impacted as sort of the U.S. and London markets with the sort of increasing frequency and severity of ransomware attacks, just given sort of their participation in the SME and primary market space. We actually did sort of a study across our book when SOFO's recently released sort of a ransomware statistic that highlighted the total cost of a ransomware attack for businesses that pay is $1.4 million. So it's easy to see sort of how the SME and primary market space has been so heavily impacted. But if you then look at the average attachment for Bermuda insurers across our book, the number we landed on came at approximately $158 million. So if you overlay that on top of the average ransomware financial impact, we can see that it really hasn't been as impactful. So we expect that the Bermuda marketplace is well positioned to continue to provide stable and reliable capacity for our clients, just as they have done for many years. Probably one last point is we then tested this theory sort of across our own book at Aon, and in the 2019 to 2020 renewal cycle, we retained 96% of clients, which is just truly a testament to the Bermuda's long-term commitment to their clients.
Thanks, Emma. Ari?
Yes, thank you, and good morning, everyone. So I will talk a little bit about the reinsurance market, and we have seen very similar trends in the reinsurance market as in the primary market. The excess of loss market at this point in time, at 1/1 renewals, we are seeing a risk-adjusted rate change of between 15% and 50%, and on an average, it's roughly above 20% on the deals that we have seen so far. In terms of proportional deals like quota shares, and we have seen a commission reduction of between 1% and 8%. So that's pretty substantial if you look at the size of the market. We have also seen on that note, we have also seen the other terms like the aggregate caps, exclusions, data sharing have improved slightly at the 1/1 renewal. The share of Bermuda at this point in time of that market of the reinsurance global cyber reinsurance market is about 40%. So almost 40% of the total cyber reinsurance capital and premium is usually at this point in time is placed in Bermuda. And Bermuda also has an outsized share of the excess of loss market at this point in time. Our estimate is about 75% of the excess of loss deals which are placed globally is led out of Bermuda with a combined capacity of roughly $200 million on any one deal. So that's pretty substantial, and Bermuda has, in last couple of years, has definitely improved its positioning in the reinsurance market. ILS has also seen quite substantial growth in cyber in the last couple of years. When I say substantial, I should take it back and make it more clearer. Before, there weren't that many deals or structures which the ILS capacity were interested in. In recent past, in 2020, we have seen 2 deals. Both of them are collateralized like reinsurance as opposed to other structures. One of them being Event Excel and one of them being X Stop Loss. So that's quite good to see that the ILS markets are stepping up. And we see that in near future there are going to be quite a number of like ILS opportunities coming to the market from what we understand from the broking community. So it's a pretty exciting time for the Bermuda cyber insurance market.
Great, Ari. And Jonathan, any final thoughts on the market outlook?
Thanks, Suzanne. Sure. So when I think about the state of the market, I think of an opportunity for betterment, and it really does tie to some of the reinsurance conversations that Ari just portrayed. You know, corrective action at the retrocession and reinsurance level can only translate into a positive for the direct insurance cyber market. As Sarah mentioned, over the last few years, we have seen an influx of carrier capacity in the cyber market, aiming to kind of ride the train of this organic and profitable growth. Not only did this prematurely soften the market through competitive price erosion and coverage expansion, but at its core, some carriers did not invest the time and resources to understand the product, the market, and craft long-term sustainable strategies. Now we have an instance where the retro market and the reinsurers are concerned with this direct cyber product and its loss activity, and subsequently demanding action in the form of more robust underwriting. And what comes out of this demand is a healthy recalibration of the broader direct cyber market. And we will see more direct insurers focused on underwriting discipline, and we'll achieve more healthy competition across the direct insurance market. And we'll see an incentive to help customers adopt better risk prevention strategies. And in totality, this creates a better, more sustainable and reliable cyber insurance market. And for me, this creates a lot of comfort because as insurers, we are equally reliant on our competitors and our peers to help us craft sufficient insurance products. The more alignment we are as an industry, the better and more sustainable products we can offer. So the state of the market, as mentioned previously, is at a very interesting time, but provides great opportunities for positive recalibration.
Thank you, Jonathan. And we'll touch on a bit more kind of about the jurisdiction in general, but I thought I just wanted to reiterate that there's a great outlook for Bermuda, and you can't discount the message that I feel was sent with the 2020 startup. In a time of global economic challenges due to COVID-19, insurance leaders still chose Bermuda to set up their companies, and we're talking about individuals that have a long history in the market. And so I think that is a message that we should accept as indicative of the strength of the Bermuda market and the reputation of the Bermuda market. So how about we pivot to some of the key risks affecting the Bermuda market, and some were mentioned in your opening comments, like the surge in ransomware surge in ransomware, or some of the primary underwriting challenges associated with cyber insurance products. Donovan, would you like to start that discussion?
Sure. So when I think about the Bermuda cyber insurance market, that predominantly provides high and low access capacity, and is still in the process of building cyber portfolios to a reasonable scale. Loss activity, loss triggers, loss uncertainty, which would challenge portfolio profitability at this time, stand out as overarching risk. More specifically, the progressive nature of loss exposures, cyber catastrophes and systemic exposures, and long-tail risk uncertainty. So to kind of elaborate on these, key risk number one, the progressive nature of loss exposures, which have been to some degree discussed already, but these loss exposures present significant risks given their continuously evolving and advancing nature. Two good examples of this would be the cyber threat environment. What I have never seen in my short 5 years in the industry is a year free of material cyber events, or even a notably low cyber event year. Rather, year after year, the insurance industry encounters a progressively advancing cyber threat and loss environment, with events occurring that eclipse events of previous years. When I reflect on 2020, it truly emphasizes this. We saw some of the largest distributed denial of service attacks ever recorded. We saw the explosion of ransomware attacks to a frequency and severity unforeseen in the past. We saw one of the most sophisticated and pervasive network intrusion events with the SolarWinds breach. We're also starting to see a massive expansion of data privacy laws. Since May 2018, there's been a wave of new regional data privacy regulations enacted with the aim to make digital experiences safer and more secure, as well as place data ownership and control back into the hands of the customer. These privacy laws, additionally feature severe fines and penalties for companies who are negligent and non-compliant. For global companies, the ones who we typically have in our portfolios here in Bermuda, with an operational presence that extends across multiple data privacy law regions, they have a heightened exposure to these severe penalties. And this exposure is only expected to increase as more and more data privacy laws are enacted in future years. These two examples, the threat environment and the data privacy law expansion, emphasize the persistently evolving and advancing exposure landscape facing Bermuda cyber insurers, which directly equates to a heightened degree of potential loss activity and loss dynamics such as underlying erosion risks that create unintended vulnerabilities in our portfolio. Key risk number two, cyber catastrophes and systemic exposures. When you think about these two, they become greater realities, with each passing year. When you think about the hyperconnectivity of devices to the internet and networks continuously expanding, as well as the ongoing transition to cloud computing, utilization of third-party technologies, really reinforces a reliance on a small number of critical suppliers. And at the same time, we are seeing a growing vulnerability in the form of extremely interconnected web of organizations in which a single event could impact and trigger losses for several insurers simultaneously. Events such as the SolarWinds hack, which impacted nearly 18,000 organizations, really brings into focus the pervasive and systemic potential of a sophisticated attack and how far-reaching and how impactful it can be with malicious intent. This type of event, or a similar type of event with a malicious intent, can cause disruption across several territorial boundaries, triggering large losses for several organizations within a single insurer's cyber portfolio, that the potential loss aggregations would significantly challenge the profitability of these portfolios and possibly even the financial solvency of overly exposed insurance companies. And then key risk number three is long-tail risk uncertainty. There remains a residing uncertainty for excess insurers around mid to long-term costs associated with cyber claims. In particular, the uncertainties deriving from judgment decisions, judgment amounts in liability lawsuits, fines and penalties issued, limited legal precedents, state and country legal disparities, and social inflation implications.
Thank you, Donovan. Sarah, would you like to add anything?
Yeah, Jonathan did a really good job of kind of highlighting the key risks and, what's facing the market currently. I would just maybe wanted to add a couple things about, the data that's been available to us. Cyber has always been quite a difficult product to underwrite to, and especially if you don't have the appropriate underwriting information. Historically, it's been fairly difficult to get that information, and you really need that to sufficiently understand and evaluate the risk. It's unlike other products such as D&O, which can be underwritten from publicly available information such as 10Ks and other SEC filings. Clients have been getting much better at providing the right information to underwriters and having the right people on the underwriting calls or meetings is so essential, and it really serves as the primary source of information for us aside from the application. We really have seen an increasingly improving quality of applications and disclosures provided, especially surrounding ransomware as it's become more of an increasing risk. And it really does help us understand and better and more appropriately price the risks. It's interesting because COVID in some ways has allowed for us to have better access to underwriting information because everyone is doing the underwriting meetings remotely. Previously, it might have been difficult to get the right senior level people in the room all together for an in-person underwriting meeting. But now remotely, it's almost easier to get these people at least together for a call. And we've all, both the underwriters and the clients, have ultimately been able to benefit from that.
Thanks, Sarah. Ari, did you have anything that you'd like to add to the data discussion?
Indeed, for sure. I totally agree with my colleagues here. So cyber is a challenging area to underwrite. We tackle it from a data standpoint. So the advantage we have is that we have two very large data sets. One is that we see 90% of the insurance markets through reinsurance data. So we see the pricing trends in various different markets. We have information on what kind of claims are being reported in various different parts of the globe. We do see the trends in the distribution and the coverage area and so on and so forth. So that's brilliant. The other side of that, the one that we match it to, is we monitor about more than 1 million customers who have purchased cyber insurance cover across the globe. We monitor their attack surface area. We have a good understanding of the technology stack. And there are lots of ways to do that. I mean, there are lots of ways you can collect that kind of information, and you can actually match it to the open port and the kind of vulnerabilities, the CVEs, which are publicly available, and try to match it to the technology stack to that. So there's a lot you could do with that data set. What we are doing at this point in time is we are helping our clients, which is the insurers at this point in time, to understand and underwrite cyber much better than they have done in the past. We help them kind of rebalance their book. We help them monitor their tail risk, and wherever possible, we guide them through which are the parts of the market they should be concentrating on because of the profitability. We want to go one step further. We definitely want to solve this cyber risk problem for the insureds in the end. So there's a lot of work that we are doing with several cybersecurity firms out there where we could actually downstream some of this information to the clients and make cyber insurance more affordable and make it much more transparent going forward.
Thanks, Ari. I think it's very interesting because, I've been following these conversations over the last year and a half, maybe 2 years, and seeing the discussion really focusing on a collaboration between these two, what used to be separate markets of, the insurance and then the cybersecurity, but understanding how it's very important to get many times the best result for even policyholders, having that collaboration, but then also there being a discussion around the sharing of data because, for the most part, a lot of the data that's had might be proprietary and people see that, them having better data than their competitor, obviously it's a competitive advantage. And so it's an interesting discussion. And we might touch on it, I guess, a bit further in the panel discussion, but just that observation around that this now collaboration versus kind of that distinct separation that used to be present. Would anybody else like to add anything before we move on to these comments? Emma, I don't know if you wanted to add anything.
Yeah, I think, everyone raises very good points. I think, collaboration is key, not only between sort of the insurance and reinsurance teams, but having an open dialogue between sort of the clients and the underwriters with so much volatility in the marketplace has really been sort of key for us over the last sort of just months, even since watching solar winds come into the market, which sort of seemed to frighten everybody. If we were able to sort of set up a call with our clients and have underwriters discuss with them sort of what sort of effects they may have from solar winds, or sort of the any steps they were taking to mitigate any issues that may come up, sort of just gave clients the opportunity to share that information, and the underwriting team so much more comfort around sort of the risks that they were underwriting. So I think, just keeping that dialogue very open will be sort of key as sort of the market volatility continues.
And if I could just kind of extend that opinion that Emma just, and that point that Emma just raised, the broader cyber market as a whole has been criticized by risk managers and cybersecurity experts for not doing enough to protect the broad-ranging cyber threats and loss realities that companies face. And now we're at a point of broad-ranging dislocation, retraction, corrective action in the form of halving limits, restrictive policy terms, co-insuring ransomware risk, requiring large deductibles across to address out-of-control losses, that we run the risk of creating an even larger protection gap and offering an insufficient cyber insurance product that fails to address the increasing and real risk that organizations are dealing with. So in this environment where we're seeing significant risk that challenge portfolios, we still need to remain mindful of our fundamental purpose, which is to provide risk transfer solutions that allow businesses to optimally pursue and achieve their goals.
Thanks, Donovan. So we've talked about opportunities in 2021 for the cyber market in Bermuda, and we've highlighted new products and opportunities, but what haven't we said? So ultimately, why Bermuda? What differentiates Bermuda from other markets? And for me, it comes down to three things, and they'd be agility, stability, and ability. And so essentially, starting with agility, I really the regulatory market or the regulatory environment in Bermuda, I think is key to the jurisdiction's success, in that the Bermuda Monetary Authority has historically been able to ensure that the environment here is conducive to global operations. And so they've been able to find the right balance between having a strong regulatory environment, but still allowing for innovation. They've achieved and maintained Solvency II equivalence. They've obtained the NAIC reciprocal jurisdiction status, and essentially that allows Bermuda reinsurers to be able to operate with no disadvantage as foreign reinsurers to those that are kind of operating at a national level. The reinsurance market in Bermuda has historically been stable. It shows up to pay claims. Bermuda reinsurers make up about 36% of the global reinsurance market based on P&C net premiums earned. And historically, they've paid over $208 billion to U.S. policyholders in the last 20 years, and over $72 billion to European policyholders. So again, our reputation as a market is largely one of the things that are very attractive for participants. Maybe I can open it up to you to provide some of your opinions on why Bermuda. Maybe Sarah, you'd like to start?
Yeah, one of the points that you mentioned, I think that needs to be highlighted even further is the talent. Bermuda has a very deep bench of insurance specialists, including underwriters, lawyers, accountants, and actuaries. And the proximity to these insurance experts in such a condensed geography, it does make Bermuda an attractive jurisdiction. Just speaking further to the strength of underwriting, clients are dealing with very senior level underwriters within flat structures. As opposed to some other jurisdictions, they're often dealing directly with the decision maker, which allows them to make us to make very quick responses and turn around quotes and binders and terms to clients very quickly. I think we've gotten a lot of very positive commentary from clients that have spent time down in Bermuda. And, you know, the meetings, they've commented how interactive they are, and you know, the level of questions and the strength of the underwriting, I think, has really been demonstrated. And we've gotten really great feedback from clients, and which I think highlights the strength of Bermuda's talent.
Thanks, Sarah. Anything you'd like to add, or anyone else would like to add? Ari?
Yeah, sure. Bermuda is an exciting place to do business, and BMA is for sure is one of the most like future-focused, visionary regulator that I've met. They definitely have like a very strong technical capability, but they also guide you instead of telling you like, hey, these are the regulations we have to follow. But also, let's not forget the contributions from Premier Byrd. Like, he has been outright from the very beginning. He has been he has exhibited like extremely charismatic and visionary leadership of like bringing the technology and the fintech companies here and engaging them in a far better way than any other leader I've met in past. All this groundwork that has been done in past 4 years, and also by BDA for sure, I think this is going to take us a long way into the future, and I think there's several different paths that we can go from here, and I think like we are in the right hands.
You know, Ari, I would definitely agree, and as you mentioned, kind of the BMA and the way that it facilitates innovation, it reminds me that, you know, the BMA has introduced not too long ago this regulatory sandbox that allows for innovation in a safe environment that protects policyholders. And so it encourages innovation. It allows, it's almost kind of a testing ground for new things while not jeopardizing the reputation of the jurisdiction or jeopardizing policyholders. And I think that that's just a perfect example of the way that they've been able to establish an environment that encourages people to want to come here and do business. Would anybody else like to add anything?
Yeah, so
I guess
you
could just say, you know, just further on that, the BMA, you know, truly fosters this framework that attracts business to the island. If you look at the digital asset space, the BMA has provided the ability for new digital assets insurers to set up quickly with their focus on capital adequacy and understanding of their key skills in the position to underwrite the risk. Bermuda quickly becoming a global go-to market for liability policies, particularly in the cyber risk space for the digital assets.
Yeah, and if I could just add, I think in terms of why Bermuda, and when I think about why Bermuda, there's no other place where the insurance industry kind of pervades society and the culture as it does in Bermuda. When you think about the regulatory, the BMA, and the regulatory environment that's created, this regulatory body has a deep understanding of the insurance business. They're accessible and responsive. They foster a speed to market advantage that is distinct from any other dominant insurance jurisdiction. When you think about new company formation, our regulatory environment can bring a new entrant to the market faster than any other jurisdiction. And as mentioned, Bermuda remains a jurisdiction of choice when it comes to new company formation to address severe market volatilities and capacity shortages, which we are currently experiencing throughout the industry. And I also think when you think about why Bermuda, a lot of credit needs to be given, a lot of attention needs to be given to our innovative heritage and spirit, which has carried through for over 35 years and underpins who we are as an industry and how we aim to be solution orientated. I think how we position ourselves and approach the market, we approach deals with a desire to find solutions and help our clients to address complex risks that they face. And this has been seen, that this historically has been shown over time. We've seen various policy forms created to address complex risks that are unable to be addressed in other jurisdictions around the world, such as the Access Casualty 004 form, CODA DIC Side A product, the Wage and Hour Insurance product, and then the Cyber Fines and Penalties DIC product, which is newly released, which really does create, emphasize Bermuda as a center for insurance product development and optimize environment to encourage innovative thinking and bring life to innovative ideas.
So one thing, if I may add to this, and brilliant points made, Donovan. So for any future insurance company, or for any insurance company who wants to establish itself in the 21st century, they need three things. They need capital, they need access to markets, and they also need data. All of those three are available in Bermuda. I mean, the data part is often overlooked, but reinsurance being an established jurisdiction, Bermuda being an established jurisdiction in reinsurance, have compiled a lot of data, and we could essentially create several other products on top of that data. It's just a matter of time when the insurtechs will hopefully come here to use that to their advantage. So I think that's where we should focus in coming years.
Thanks, Ari. And I think these discussions actually lead us very nicely into the next area, which is really around Bermuda managing to perfect the balance. And so we kind of talked about the Bermuda Monetary Authority and the government and that ability to create a strong regulatory environment and accommodate innovation, and the fact that the Bermuda Monetary Authority continues to ensure that its supervisory framework is aligned with international standards to facilitate Bermuda companies operating in the global marketplace. So with all that said, how do you see this environment benefiting the future of cyber coverage? And so this is kind of really the exciting stuff, and where are we going? Emma, would you like to start?
Yeah, definitely. Donovan touched on it very briefly there, sort of the innovation sort of around the fines and penalties. The regulatory landscape of data privacy and protection is developing quickly. The GDPR, the General Data Protection Regulation, really kickstarted this trend back in May of 2018, and many have followed their lead, adopting their own regulatory framework. And in leveraging sort of Bermuda's jurisdictional advantage, insurers here have been able to provide cover for regulatory fines and penalties and punitive damages for data protection violations, and not solely just in respect to the GDPR, but for all the new regulations that we see. Coverage for regulatory fines and penalties has long been a coverage tenant in policy forms. Bermuda Solutions can help clients ensure that the payment can be made by the carriers in the event of a fine or a penalty. We saw a number of clients interested in the coverage over the last year and discussed with them sort of at length the benefits. I think many were troubled by sort of the impact that COVID-19 had put on them from a budgetary perspective, but I'd expect as sort of we continue to see new regulations come into place that the demand for a product will continue, and Bermuda will be here to respond.
Thanks, Emma. Would anybody else like to add something? Maybe Ari?
Yeah, sure. So we see that, so we are working on a number of exciting products, and mostly out of Bermuda. So one of the near-term opportunities that we are working on is a white label solution which vertically integrates the cyber insurance and cyber security ecosystem. There's a lot of commonalities between these two industries, and there's a lot of synergies that can be built, actually. So what insurers don't have at this point in time is data to the extent that a cybersecurity firms have. They literally have a guard mode in your computer, if you know what I mean. So they literally can know precisely what kind of software you use, what kind of patching you have, what are the open ports, and all of that can be mined from that data set. That data by itself would give you a lot more insights in how to design a product to help your clients, and like also, in many instances, you can reduce the claim frequency and severity, especially on ransomware, which has been which has been about 80% of the losses recently, really. So, and at the same time, what cyber security doesn't have, which cyber insurers have, is a distribution channel. To sell cyber security products, it takes about 70%, every 70 cents to $1 of that industry goes from marketing. And you're not talking about more than like 10,000 clients in many instances. But on the other hand, in cyber insurance, we have we have millions of clients out there in the world. So that, I think, is the perfect marriage between these two industries. We already have launched in the U.S. Our brand called DataStream Insurance, and DataStream, what it does, it offers cyber insurance to MSP clients, MSPs and to their clients. So essentially, you're bundling insurance and cybersecurity at the point of sale for the cybersecurity software. We want to take it one step further in our white label product, by which we not only sell the insurance through the cybersecurity, but also sell or bundle cybersecurity solutions with insurance. Now, that economics is much harder to work, and there are many different ways you can. We have iterated, and there's some really cool ways by which you can actually combine these two, and that's the holy grail there. How do you combine these two products, given the economics are so very different, of those two products? Yeah, it's going to launch in the next few months. We already have a few clients that we are working with to bring this concept to the market.
Thanks, Ari. Very interesting. So, Donovan, would you like to add anything? What is AXA XL seeing?
So I would really just extend the conversation that on from where Emma kind of left off. At AXA XL Bermuda, we were able to create this cyber fines and penalties DIC product that provides a backstop and a comfort to drop for clients to drop down and provide coverage in the event the underlying carrier is is willing but unable to provide payment for these the vast array of fines and penalties that are materializing in this expansive data privacy law environment. And this is primarily made possible due to the unique jurisdictional benefits of Bermuda. And again, as Emma kind of described, at a time when data privacy is expanding rapidly across the world, there is a need for, and the risk exposures are expanding rapidly, there is a need for certainty that coverage will be provided and that customers can be suitably indemnified for cyber insurance, for the cyber insurance product that they have purchased. This is something that clients have really been appreciative of, and emphasize the capabilities of the Bermuda cyber market to offer bespoke solutions to solve real risk, real and valuable risk that clients experience, which are unable to be provided and crafted in other jurisdictions.
Thank you, Donovan. Before we move on, does anyone else have any additional comments that they'd like to make with respect to any future cyber coverage products or opportunities?
Hi, Susan. It's Sarah. I think that the one thing I wanted to kind of just drill down a little bit into is just Bermuda's unique position to make these products a reality quickly. My co-panelists have done a great job kind of highlighting some of the evolving products and what's out there. I just think it's so important to highlight the fact that we're able to pivot and respond so quickly to these changing risk landscapes. And I think Bermuda has always been in a unique position of being the forefront of innovation, but being able to bring these to the market quickly is just so important. And I think overlaying that against the backdrop of what's happening with the COVID pandemic still playing out, I think there's no doubt that there's going to be clients that are going to be looking for insurance products that can address the changing risks that companies are facing because of the pandemic. And I think Bermuda is very well positioned to respond and innovate quickly as those risks develop.
Great, thank you. So unfortunately, we have reached near to the end of our time, but I really wanted to give everybody the opportunity to provide the audience or leave them really with some closing remarks and some thoughts. So if we could do that and before we close out. Ari, would you like to start?
Yeah, indeed. I think it's an exciting time for the cyber insurance industry, no matter where you are. I think if you just look at what has happened with COVID, it has actually pushed the digitization efforts, like it has doubled literally in 1 year, which means much more demand for cyber insurance. And I don't think the insurance industry has enough capital to stomach that kind of growth. Which is exactly where Bermuda fits in. We have the infrastructure to bring in substantial capital to resolve that problem, and at the same time having a government which is quite future focused, and with the digitization of money and value chain, with cryptocurrency and everything else, I believe all of that will come into the cyber insurance market, which is going to balloon our prospects even further. So for sure, it's an exciting time to be here in Bermuda and work on cyber insurance.
Thanks, Ari. Emma?
Yeah, I would definitely echo sort of what Ari has to say there. I think it's going to be a challenging year with sort of no expectation that the ransomware activity is going to slow. And sort of no end to sort of when work from home and sort of the pandemic may ease, we're going to have to work together to find sort of meaningful solutions for our clients in order to sort of address some of these aggregation issues we see sort of across the board.
Thanks, Emma. Donovan, any final thoughts?
Yeah, so for me, when I think about, the uncertainties that are on the horizon or that are viewed on the horizon, it's an advantage to have the Bermuda cyber market on cyber insurance programs. As we've kind of conveyed in this panel, the ability to offer stable capacity supported by a relationship-driven culture that is underpinned by high-quality underwriting talent and highly rated capital, and then the bespoke capabilities to craft innovative solutions to quickly address nascent risk exposures that form really do highlight Bermuda as truly an advantageous jurisdiction to have on your cyber program to be able to to weather this uncertain time.
Thanks, Donovan. And lastly, Sarah, any final thoughts?
Yeah, I would just reiterate the importance of Bermuda's value proposition in the, this current environment. It is an exciting time to be part of the cyber insurance market in Bermuda. I think that what we've seen in the market really highlights the importance of having Bermuda, as part of the cyber insurance programs, and the importance of diversifying geographically cyber insurance programs, and having Bermuda as a part of that to be able to innovate and be part of their long-term insurance program and capacity.
Thanks, Sarah. Okay, so I would now like to take this opportunity to thank the panelists, Ari Chatterjee of Envelope Risk, Emma Norman of Aon, Donovan Burgess of AXA Bermuda, and Sarah Sperling of Sampo International. We will now begin our live Q&A after a brief pause. Okay, so now we are moving into the live Q&A portion of the session. We've had quite a number of questions submitted through the Q&A function, so thank you very much for your engagement. So I will start by, let's have a question. We'll start with, recently there's been a discussion at the international level around the benefit of standardizing insurance industry language. How could this be beneficial in this cyber context? Sarah, would you like to start with that one?
Sure. I think we have to remember that cyber is still a relatively young product, and it's being used to try and cover a dynamic and evolving risk. Standardizing policy languages, I think it's inevitable as the product matures and the policies are tested by claims and the courts. standardizing language would help remove some of the ambiguity that insurers are, the insureds understand that they're purchasing. I don't think it benefits anyone to have uncertainty or confusion as to what their cyber policy is covering. This would also help address some of the issues we've had that have arisen from silent cyber with overlapping coverages across insurance products. Ultimately, I think the clarity of coverage would help carriers also ring-fence their risk and better address the challenges of aggregation, which are something that are plaguing our industries right now. And this would benefit the insureds in the long run by resulting in clarity of coverage and then ultimately better long-term stability in a carrier capacity. Thanks.
Thank you. I guess I can open it up also to the other panelists. Does anybody else want to add anything to what Sarah has said?
Yeah, I would add, sorry, this is Donovan. I would add some additional comments to that and really kind of echo what Sarah mentioned. Clarity is not yet established. Standardized language is not yet established. Consistency is not yet established. And this does create challenges for the industry and the clients that we serve, albeit market cycles such as what we're experiencing will allow us to progress and to become a more consistent and aligned and efficient market. So although we are facing a lot of short-term uncertainty and kind of 2021 outlook, what should come out of all of it and what we should become in future years is a better cyber insurance market that does provide the clarity and the standardized language to ultimately provide a better insurance solution to our clients.
Thanks, Donovan. Anyone else on the panel have anything that they'd like to add before we move to another question?
Yeah, I can add something. On the one hand, it would really help create an international standard of cybersecurity, similar to how the property market has created international standards for building security. But if you look at cyber risk, it's truly unique, and no one client has the same risk. So they'll be looking for a tailored policy to sort of cater to their needs. So I think it would really just have to be on a client-by-client basis instead of sort of a standardized language across the board.
Thanks, Emma. Anything else before we move on? Okay. I see that we have a question here with respect to ILS, and I also see that this was answered in chat, but we are having, or in the series that the BDA is putting out, I think there is going to be a session on ILS, and maybe having a bit of an open chat about this would help be a good preview for that session. So I will throw this question back out to the group. With the rise in cyber risk over the last few years, is the ILS market where the capacity is to provide broader coverage and higher limits? Maybe Ari, you'd like to speak to that. I think you spoke to that earlier in the panel discussion. Maybe you'd like to start us off?
Yeah, indeed. I think ILS capacity would be needed to bridge the gap of demand and supply. At this point in time, we see the supply side is not as much for cyber capacity, especially with the increasing exposures, also due to COVID. And we have seen the initial first couple of deals being done in the ILS markets with collateralized reinsurance. We know that there are a few others which are in process. So we believe that we will see a renewed interest from the ILS markets in this space.
Would anybody else like to add to what Ari said? Okay, let's move on to another question. We have a question here around, I guess, almost the pervasive nature of cyber risk. Is there a point where cyber tech risks become uninsurable given the increase in claim severity, ever-expanding data privacy laws, and exposures for tech-focused clients being enormous, becoming larger than most countries' economies? Ari, would you like to jump off with that one as well?
Yeah, indeed. I think it's a matter of supply and demand and at what price you're talking about. Of course, there are a lot of risks which should be insured, just like pandemic as well. It's a matter of budget constraints on the insured side as well. Not that there is exposure means that people will like to pay to buy insurance for it, and it doesn't mean that what they're willing to pay would be sufficient for this the supply side, which means the insurers to be willing to take that risk upon. So I do think the exposures will keep increasing, and as you pointed out, would be even larger than some of the nations' like overall GDP. But frankly speaking, is all of that going to be insured in the market, but at what price? So I think that price and price point would be a crucial part of the demand-supply gap.
Thank you. Anyone else would like to add anything with respect to that question?
Hi, it's Sarah. I would just reiterate the point, Ari's point about the pricing. I think we've seen some of that dynamic here, in the last little while with cyber, as the increase in severity of claims has really kind of hit the marketplace, and we've seen a shift in pricing. I think as long as there are measurable data points and, these risks are able to be underwritten, I think it just really comes down to a matter of price and what the market and the client and the insureds are willing to bear. Thanks.
And I would just say in the long run, given kind of the huge potential for the growth of the cyber insurance market, insurers are unlikely to find cyber risk uninsurable at this stage. I think when you consider claim severity and systemic risk with regard to like portfolio protection, consideration should be given to the fact that the cyber market is still in its infancy, as mentioned, and with new cyber insurance, if any new insurance products, traditional means of portfolio risk management such as reinsurance, retrocession insurance, and facultative insurance have proven suitable to continue to provide insurance solutions, when there's a risk of large claim severity events. However, as talked about in this panel, there is the presence of an ever-evolving risk landscape in terms of threats, technology proliferation, critical vendor aggregation, which are increasing the exposures and realities of the systemic event. And as a result, traditional methods of portfolio protection may prove unsustainable in the future. Therefore, it kind of may become necessary to adopt more sophisticated measures of cyber portfolio protection against these larger scale events. For example, like a federal level program that acts as like a backstop in the event something big occurs, like the TRIA program or terrorism risk.
Thanks, Donovan. Anybody else have anything to add on that question? Okay. I think the rest of the questions, we have one or two, and they're a bit involved, and what we're going to plan to do is actually answer all of the rest of the questions through the chat function once we're done, because we're almost at the end of the session. So with that, I would like to take this opportunity to thank Net Diligence and the Bermuda Business Development Agency for facilitating and sponsoring this discussion, and to also thank you, the audience, for tuning in, and please enjoy the rest of your day.